In this Forex Midweek Outlook, I'm discussing the DXY, the Euro, the Pound, and also the dollar versus the Swiss franc as we come up on those PMI numbers on Thursday. Now, before we get started, if you want my help with your trading, including real-time market updates, seeing my trades live, also daily trade setups, 2 VIP-only videos every single week, and also full access to the course. It all takes place in Discord, so it's all real-time. I'm in there every single day helping out members. Be sure to check out the link in the description of this video for 85% off lifetime access. If you're on the website, click on the button that says Join VIP. And look, guys, if you join and you don't love it for whatever reason, within 7 days, just shoot me an email and I'll refund every penny, no questions asked. So it's a risk-free way to get into Discord and see what it's all about. All right, guys, so the DXY monthly time frame. This is that channel that we've talked about going back to 2011. So if you guys have seen recent videos, you should be well-versed in this by now. We have this level down here off the 2011 lows connecting with those 2021 lows. And of course, we saw June close below. Okay, so for the DXY, this comes in right around 97.7. Now, the challenge for the DXY that we've discussed recently is the fact that even though we did see weekly closes above 97.7, I started to allude to this, over the past week, really more than a week now, that even though we did see weekly closes above here, because if we go to the weekly chart, you can see where we did get 2 weekly closes above this level back here. So here's our key level. We had to close above, retest as new support, close above. So 2 weekly closes above, and you can see where now the DXY is starting to follow through. Now, the issue here, and the reason that this is happening, guys, is it comes down to timeframes. It's not a matter of the level I have drawn. It's not a matter of channels or anything else. It's a matter of timeframes. Okay, so right now, back here, the market had reclaimed this on the weekly chart. However, the issue with this, and I alluded to this again, a week ago, and we've been talking about this in real time in VIP as well. But the issue with this is that look at June, right? June closed below. July has not closed yet. So even though we saw the DXY reclaim 97.7 on the weekly chart, the monthly chart has always been holding in below it. So we can say that the DXY is holding below 97.7 on a monthly closing basis. And that's simply because July hasn't closed yet. Okay, and every single time, guys, the monthly chart is going to trump anything on the daily or even weekly charts because of volume. There's more volume in these monthly candles than there is in a weekly candle, okay? And volume equals conviction. So I wanted to explain that, guys, just because there were a few questions that I saw out there that, it can get a little complex, but I assure you it is very simple once you get used to looking at these multiple time frames. All right, so I told VIP members, guys, that back here when the DXY was breaking this July trend line, all right, so let me move out here so you can see it. This trend line right here off of the lows back here in July. You can see a very well-defined trend line through here. We had the DXY breaking down. At this point, guys, this is when I started warning VIP members that we could get that rotation lower. In fact, I was even kind of talking about it back here in that mid-range around 98.50 that we talked about. The fact that the market wasn't able to break this, we saw the gap down, couldn't even close the gap up here at 98.61. This right here was starting to look a little bit more bearish. We had the breakdown from the DXY through here on this trend line, and that opened up 97.7. Now, here's where I'm sure that a lot of people got themselves in trouble again, because we had been talking about the imbalances down here below 97.7. Okay, so there were imbalances at 97.60 and 97.50. We talked about those at length. I've taken them off for now. But the issue here is that if the DXY, if this was just going to be a sweep of these lows down here to clean up those imbalances, you would want to see something very aggressive from this area. And we did not get that. So what I told VIP members on Tuesday in real time as the market was coming down here, right on this move right here, after watching the price action for about an hour or two, I said that, this looks pretty weak. I would not be bullish on the US dollar expecting a reclaim up here, just because we saw the DXY drift down here and close below 97.7 on this candle. And then from there, we just saw it continue to drift lower, right? There was no demand here from buyers, and sellers were essentially absorbing everything that buyers were throwing at it. Okay, so things look pretty bearish there. And you can see where today the market did bounce over the last 24 hours from this 97.30 area, and we are once again breaking down. So you can see that we have, some lows back here in this area, and then of course these recent lows here. So a close below, guys, flips that to new resistance. Keep in mind that we do have those PMI numbers on Thursday, okay? So that's going to matter for these markets. However, at the same time, you can look down here and see that we also have these poor lows or unfinished auctions. Yes, that is a real term. I did not make it up, guys. Some people here on YouTube have been saying that I made that term up. I assure you, Google unfinished auction and you'll see what I'm talking about. So this down here, guys, poor lows down here around 96.60, 96.70. These right here could get taken out over the coming days. I mean, even as soon as tomorrow with those PMI numbers coming out, right? Because ultimately this looks pretty bearish once again here for the DXY, closing Tuesday back below 97.70. Now, of course, the alternative to this would be if the DXY were to close below here and then reclaim this level and also get back above 97.70 by the end of the week. I mean, really would have to do this by the end of the week. If that were to happen, then it would start to look a little bit more bullish for the US dollar. But right now, guys, there are no signs of that when we look at the DXY, even the euro and the pound, or even the dollar Swiss franc. There's no sign right now of a bullish USD. But that can change. We all know how quickly these markets can change, especially with Trump in office. So we've got this level down here, the July low, 96.37, 96.38. That's going to be a key support here for the DXY. And we also have, if we take a look at the daily time frame, this right here, this descending trend line, guys, is that 2025 trend line that the DXY did break out back here. So this is going to be a factor to watch for the DXY. It's going to be very interesting to see what happens down here if we get that retest, right? Because we did get a breakout through here. So this level could come in down there around that July low. Okay, so keep a very close eye on this trend line here because chances are we will see some type of reaction. I'm not saying that the DXY will turn bullish at that level, but buyers are likely to step in somewhere along this level. And again, that could line up somewhere maybe just below that July low, okay? So let's take a look now at the EURUSD. And if you guys are enjoying this content, if it's helping, be sure to subscribe to the channel and click that like button because it really does help out these videos and they take a long time to make. So I always appreciate it, guys. Looking at the euro, guys, what we had back here, 4-hour time frame, I was shorting the euro through here, right? For factors that I saw at the time, also the fact that, like I mentioned at the start of July, we actually had the euro ending June up here at the top of this May channel. Okay, so if I move out here, you can see on the 4-hour time frame, this is your channel from May, and June closed right up here in this area. Okay, so given the price action up here at the time, I was looking for lower highs and lower lows. I was shorting the market through here, stop loss above the highs, took half off through here, and took half off down here around 116.30, which was that imbalance that we discussed at the time. Okay, so really nice trade there. I haven't done anything with the euro since that time. And what you can see here now too, I want to go over this here, a few things. Okay, so first of all, again, some traders probably got themselves in trouble here this week trying to short the market up here at this level, right? Yes, this is the bottom of that May channel, but the issue here with this move is that this candle, guys, this move right here, this wick, if the market, okay, if the euro was going to be weak and sell off from this area, what you would want to see is, yes, you could get a partial fill of this wick, but this right here, guys, the fact that the market was just making this stair-step pattern higher, so you've got these lows back here, highs through here, you had the market break out above, go sideways, and then just continue to make higher highs and higher lows. This, guys, is not what you want to see if you're looking for shorts, okay? You want to see the market, if anything, if you're looking for shorts, you want to see the market wick into areas like this and then sell off immediately. If you see this right here and the market just goes sideways, that is not what you want to see. And then, again, we had the market, once again, make a higher high and a higher low, okay? This is not what you want to see if you're looking for shorts, okay? Because this is showing that buyers are absorbing everything that sellers are throwing at it. So again, not something that you want to be shorting. Now, if we look here on Tuesday, okay, so depending on how you draw this, the bottom of this channel, if we draw it right here, then you can see where technically Tuesday closed above, and right now Wednesday is buyers are doing their best to try to close the market above here once again. Now, another thing I want to point out here is that you'll see this single print down here. If we go to an hourly time frame, so this single print right here, this was an imbalance in the market based on this move out of this range. Okay, so like we talk about a lot here on this channel, you can see where this back here was your range for the euro that built up, and you can see expansion out of the range through here. Okay, we got the expansion, the market came back and retested this. Now, based on this expansion, okay, this right here, this single print was a very thinly traded area right through here. And so what I told VIP members, again, and benefit of being in Discord, guys, is that when the market was back here, I pointed this out. This chart, along with 3 other charts giving updates on where the single prints were based on those Tuesday moves. And this right here, as I always say, could serve as a magnet, so to speak, for a market and also key support or resistance. In this case, obviously, key support here for the euro, given the fact the market was above it. And you can see where this level was 117.11. I haven't touched this level. This low right here, guys, was 117.11 on the dot. Okay, so really nice there. I know some members in Discord did catch this because, again, I announced this before it happened, and you can see we have some nice follow through so far. Okay, so at the moment, guys, if the euro can hold above the bottom of this channel, then we're looking at higher levels here, including a little pivot through here around 117.90, 118.17 or so, and then up there toward 119. So 119 is interesting because if you go all the way back here, to this price action. We've discussed this before, but you can see where we have these two equal highs. So equal highs like this tend to get taken out because what happens here is you get liquidity building above here. The market never took it out over here in this area. And so these tend to also become potential magnets for a market. So this could be in the cards here for the euro if it can hold above the bottom of that channel. Again, it has to close above here. We also have those PMI numbers on Thursday. So keep that in mind, guys. This is not something, in my opinion, that you want to go chasing. If you got in lower, then, congrats, it's going well for you. But trying to chase this into those PMI numbers, especially as the market is trading up here at the highs currently within this trend, it's not really, in my opinion, the time to be getting in or trying to chase this market because 9 times out of 10, that's not going to work out well for you. Plus, it just creates bad habits. Okay, so bottom line, guys, stay above this area here. If we reclaim 117.50, this region through here, these lows and these highs, then this area should flip to new support. And again, we've got this area around 117.90, 118.17 or so, and then potentially 119 over the coming days. Okay, so I know that's a lot to cover, guys. We still have more, though. Let's move on to GBPUSD, which is very similar to the euro. So we've talked about all of this before, going all the way back to this trend line off of these yearly highs. What I mentioned way back here, guys, is that this breakdown right here, okay, the close below here, retest, retest, retest. This right here was a great short opportunity for a move down there towards some of those lows. So played out really nicely. We then saw the pound close below the 2025 trend line. Okay, so you can see that off of these lows down here, we've got this trend line that came into play on this Monday. So this Monday closed below. Now, this is another example, in fact, a better example than the euro of why all retests are not created equal. And this right here, guys, the fact that the market actually came up here, tested this level. So first of all, you can see support through here. We got the breakdown, retest as new resistance, retest once again. Okay, so this right here is the issue. The market continued to grind higher. Now, I talked about the imbalance at 135.25 that could be targeted, right? I've taken it off from here, but this comes down to the fact that the pound back here, okay, was consolidating. You can see right through here, highs and lows. Okay, now we got the expansion out of this. There was an imbalance right through here. So right around 135.25. Now, the issue with the price action on the way up, guys, if you were trying to short that, is the fact, just like I mentioned with the euro, is we saw once again, right, resistance through here. We saw the pound close above, put in a higher low, and just continue higher. Furthermore, this candle right here, all right, this candle was so bullish, and then the market went sideways. Also, this was Tuesday. What else was happening on Tuesday? The DXY was breaking down from 97.7 and looking relatively bearish, right? No demand at all below 97.7 into that 97.50 imbalance. So again, guys, this goes back to the fact that all retests are not created equal. If you were trying to short up here or this right here, this was not the ideal price action to short because you had the market absorbing all of the selling pressure. Okay, and that's certainly the case here over the past 24 hours with the pound once again closing back above that 2025 trend line and treating it as new support, okay? So right now for the pound, what I would say is this pivot through here. Okay, so right around 135, let's see, 135.75, 135.80 in this general area, what I would say is if the pound can get above here and we get that sustained break on the high time frames above this mark, then I think we're looking at higher levels. Okay, you've got a little pivot through here as well. So let's just draw this out while we're here. So this pivot through here, these lows, and also that recent high, you know, something through here like that, around 136.80 as well. Okay, so bottom line here, you've got this range back here for the pound. And if we get above here, okay, sustained break above here, we're probably targeting that range high up there around 136.80. Okay, so pretty simple there for the pound. Of course, this area down here is going to be key support here for this market. And we are going into those PMI numbers on Thursday. So keep all of that in mind, that is going to shake up these markets. So just be really careful out there. Even if you get the trade direction right, guys, if you're trading with too tight of a stop loss, then you could get taken out prematurely. Just really keep those PMI numbers in the back of your mind when you are trading these markets. Okay, so let's wrap up here with the dollar versus the Swiss franc, which is actually something that I entered into on Tuesday. So I am short this market. And I did share this with VIP members in real time. So 79.73 was my entry. So right up here in this area. So if I mark this off, you can see that my entry was right through here. All right. So 79, let's see, 79.73 right through there. All right. So again, real time entry here. I mentioned this in Discord as I was taking the trade. This is not, hindsight stuff. So I know a lot of traders got into this as well, and it was almost immediately profitable. You can see here within the next hour or two, the market sold off. We got this big drop here, and so far the market is rebounding a little bit here on Wednesday, but that's to be expected though, given the drop we saw on Tuesday. So for the dollar versus the Swiss franc, there are a couple of imbalances up here above the current rates. Now, this doesn't mean that they will be tested, okay? That doesn't mean that they will be tested. However, these could potentially get tested during those PMI numbers on Thursday if we see some volatility, all right? So as long as the market, though, is below these lows back here that I talked about in yesterday's video, as long as the market is below here, then I am going to remain short the dollar versus the Swiss franc, okay? Because what you can see here is, like I mentioned in Tuesday's video, let's go to the 8-hour time frame, and you can see here where this is a channel from May, okay? So we have these highs up here, and we have lows along the bottom of this channel, this low here, and a couple of lows back here in May. So this is an equidistant channel, meaning these levels run parallel to one another. This too is an equidistant channel. So what you can see here is very simply, the market came off of channel support down here at the beginning of July. We got that dollar relief rally, and this formed a potential bear flag here, which has now been confirmed with this breakdown. So like I mentioned in Tuesday's video, if this holds up, if the market maintains below these key areas, right, then this right here could open up the area around 77.20. This is a key level, a key weekly level going back to 2011. Furthermore, it could be near the bottom of this channel depending on if and when we get down here. And also, additionally, guys, if you take a look at this here, we talked about this on Tuesday as well, but if you take a look at the height of this move back here, so this sell-off right here, this is your flagpole. So if you're treating this as a bear flag, this is your flagpole. If you then measure from this high back here, the same distance, you get 77.20, okay? And I'll go ahead and show you that now. If we just take a look here from this high right back here, all the way down here to the low, about 330, 340 pips in that region. And if we take the same distance here from this high up here, okay, measure the same distance down, 330, 340 gives you about 77.20, okay? So that is going to be my target there. Really nice risk reward if it does play out. Of course, we don't know if that's going to happen or not. And we do have those PMI numbers on Thursday to be aware of. Okay, but looking good so far, guys. Bottom line for stuff like this here and with the euro and the pound, as long as the DXY is below 97.7 now, it is looking relatively bearish again, or really, very bearish, I'll even say, with these recent candles here selling off and breaking once again 97.30 as well, okay? So I do think that the DXY is probably headed back there toward that July low to give us that retest there. Like I said, though, keep an eye on that 2025 trend line. That could become a factor here, and I would be willing to bet that buyers are going to step in somewhere along that area. But again, I'm not saying that the DXY will turn bullish from there. All I'm saying is watch that for a potential bounce. Okay, but really my main focus here so far this week has been the dollar Swiss franc with that short entry following the breakdown of that ascending channel. Going well so far, guys, but as always, I will manage this and alert VIP members if anything should change with these markets. So be sure to join us in VIP. Click on the link in the description of this video for 85% off lifetime access. Again, if you're on the website, click on that join VIP link. Trade well out there, guys. I will talk to you again tomorrow.